I made $2,900 with these short-term investments I was in for 1 to 2 weeks. Now, let me break it down exactly step by step on how I did it. Well, this is no cap. As you can see right here, the first short-term investment I was in was WDC, Western Digital Corporation. The second was Robinhood. The third was Palantir. As you can see, 11 1,100 as you can see 956 as you can see $784 with these short-term investments. I was only in for 1 to 2 weeks. Now I trade something called swing trade, something called options. I might be in a play for 1 or 2 weeks, months, or one day, right? Now, these are short-term investments. Why do I call them short-term investments? Because I got out of I get in them and I get out of them at the right term, and it's a short-term investment. Some people might call it trading, but the way I play it, these are investments to me, right? Why would I not? These companies are good companies for the short term. I want to invest in these companies in the long term based off of the financials, right? But first and foremost, we gonna get into Robinhood's financials and why wouldn't it's just a short-term investment mean it's not a long-term investment. So Robinhood debt to equity ratio is a 0.23. Now that's very safe. Second, the debt to EBITDA, right, is very safe, 0.1. The EBIT to interest expense, right, is very risky. Then the net income to shareholder equity is not consistent. The net operating after tax to debt plus equity is not consistent. Now, they have good free cash flow. But since those things aren't consistent, the ROIC is terrible and the ROE is terrible. I am not interested in investing in these companies for a long term. I'm not interested in holding this company, Robinhood, for 10 years. But since it's been moving a good move in the S&P, right? I'm interested in the short term. So I made this short-term investment in it. So after that for Robinhood, it takes me to the charts. I know this is a short-term investment. So for all investments, especially for this one, I want to buy in a discount and sell in a premium. Now, I know this has been a good mover in the S&P 500 lately. That's why I have it on my watch list for this month. So, what did I see on Robinhood that I like on this 4 hour chart? I look at a daily, but this swing high, it was a swing high on a daily, but since pre-market price action, this was the actual swing high. So yeah, I do look at the daily chart and the weekly and all of that, but mainly this is why I entry on, this is why I enter on, which is a 4 hour chart. And I'm gonna show you guys my exact entry. So we're gonna start right here when I do a stock market daily review every day at 1 o'clock West Coast time and 4 o'clock Eastern Standard Time. Right when the market closed, you can't place no trades, no short-term investments or none of that, right? This is me right here exactly giving you guys a step-by-step play. Why am I in Robinhood and my exact entry? Let's listen to it. First off, starting with Robinhood. Why do I like Robinhood? Robinhood, it came down to this volume imbalance. Then we left it. What happened when we left it? We had huge displacement above this swing high right here. But 4 hour, it's an actual swing high. This looks like a swing on a daily, but when you go to the 4 hour, like it's more defined, right? Because you gotta consider pre-market price action stuff. So you see the difference. Like this is a swing high, yeah, on a 1 minute chart, but I go to the hour. This one's just like right above it. So I did that one instead. I like this displacement above this swing high, but what really got me is this inversion, this fair value gap. Then we tap back into it, right? We tap back into this fair value right here. I like this displacement above for a market shift. It doesn't have to be a candle close, but I like that displacement. After you got that displacement, what's under it? I like this buy side and balance, sell side and efficiency right here for Robinhood. So that's my entry. What do we have? We have good relative equal highs up here, like at 153. I like it. I like it. I like it a lot. I have it going to 153. If I'm wrong, though,
I'm not 100% right. I'm not always right. That's why I have a stop loss. Now, if you go to that 109.19, that would be a stop loss point for me for Robinhood. Other than that, yeah, man, I got to go into this relative equal highs up here. That's where I want to see it go. A good take profit would be this 138, this 144. And another thing is, too, what is the dealing range, right? The dealing range, I'm buying in a discount of the dealing range. So you always want to do that. And I'm positioning myself to buy at the right place at the right time.
As you heard there, I give you the step by step before I even enter the play and before I even showed those profits. Because yeah, the profits is cool, how I just showed, but it's about the entry and the skill that at me actually got me towards those profits. Now I'm gonna take you back to the screenshot of me exiting the play, being all out. This is me exiting this Robinhood trade at 138.99. I got up out of it. Now, since the market did what it did recently, it came back to the break even point. If I would have held multiple contracts, this would have been a break even trade. But since the original beginnings only do one contract, I just sold all out that 138.99. Why? Because once it gets to this 0.705 right here, that's all that you really need in the trade. You don't need to go to all the way to the relative equal highs and all of that. In the market, the S&P, the SPY, not the S&P, the SPY hit all-time highs. It was right near it. So I'm like, yeah, this is a good chance to just take all of the profit out on this trade. I got in at a discount and I'm exiting within a premium. That's my whole point. I want to get when I want to get into a short-term investment that I see going higher. I want to get in at a discount and I want to sell in a premium. But yeah, that is my W step-by-step play on this Robinhood trade. But that's not it. I got two more, which is the second one. Let's go to it. Now, you might see everybody running through the stock because of AI, but I'm a financial. I like to look at the financials, and I'm gonna break down the financials of Palantir. This is the second company, Palantir. I'm gonna break down the financials on this company. Why? Because it looks like a good short-term investment. Like I said, it was a good short-term investment. I made my profits out of it, and I'm out. I would not hold this play for 10 years. Now, it could get better. I'm not saying it won't. But for right now, this is would not be a company that like an asset I'll own, I'll pass down to my kids and stuff like that. Nah, this is something I'm in and I'm out. Good short-term investment when the technicals and the analysis on it is looking right. I would not hold this company for a long term, 10 plus years. Reason being said, look, the total debt to equity, right? Now, that's very safe. The debt to EBITDA is excellent. The EBIT to interest expense is extremely safe, right? The net income to shareholder equity is not consistent. Deal breaker for me, right? The net operating after tax, debt plus equity is not consistent. Deal breaker for me. The total debt, this is what I like. The total debt to cash flow is excellent though. So the two things I would like to see for it to fix, for me to hold this company long term, is the net income to shareholder equity and the net operating after tax, the debt plus equity, right? Those two things, if they fix those and be consistent with those, I will be I will love to hold this company for a long-term investment. But man, it was a good short-term investment. Why? Because it's been one of those ones that's been leading for the QQQ, which is what is that? The technology, right? For QQQ, it's been one of those ones that's been leading, that's been doing good. So I had to slap it on my watch list for this month. And I got a W short-term investment off it. Let me show you my step-by-step process and let me show you when I entered it on the trade. Again, another time I was doing a stock market review and I brought it to you guys on why I got in it, and this is why I'm getting out. This is me explaining me getting in the Palantir trade.
Palantir. Palantir. What do I like about Palantir? Look at the dealing range. The dealing range, obviously, right? The dealing range is obviously in a huge discount on Palantir. What I like about Palantir is that we got this, we swept liquidity right here. We swept this low right here. We got this nice swing low that it got created. Then we have an inversion of this daily sales sign and balance by sign inefficiency. Since we had that inversion of it, we had this gap right here that got created. Now you want to see a push. I'm willing to see a push back into this right here, but my stop loss will be at that 156.56. That would be a stop out point for me. Um, and yeah, man, we got good displacement of like a good inversion on the daily chart. Tap back into a gap right here, and that's my entry.
Okay, so this is my exit on Palantir. I still got to go into that 194.93. But like I said, it's original McGinnis only got one contract. And I exited at that 184.70. Why did I do that? Now I got in on an extreme discount, and all of a sudden, when it's in discount prices, some huge news came out on it. All of a sudden, when it's in a discount, some huge news came up to give it that push up. Now that push up was right above equilibrium, which that means what? It's in a premium now. Like, and when it's in a premium, I sell. Behind discount, sell, and premium. That 184.70 was right there near that premium level. It was right on equilibrium, but I was like, since news came out, bro, I don't really like it because I know it's gonna have people rushing to the stock is going. They're gonna try to push it higher, but they think since this good news came out, oh, it's gonna keep running and running and running. Retail gonna come and try to buy the stock because they saw the good news that came out, not knowing it's in the premium. You don't want to buy in the premium, you want to sell in the premium, right? So in this case, I knew that was happening, and I took profits all out on Palantir. And it was a good risk reward ratio. Let me show y'all. Let me see real quick. This was a W risk reward ratio. It was a 1 to 6 risk reward. I got very, very close to that 2 risk reward trade, but it wasn't, man. And I got out when I got out. I made 100, like how much did I make? I think I made 100 and something percent on this contract. Yeah, I made 114% on this contract, right? So yeah, man, that was a good short-term investment. The next one is that I told you I was getting in is the Western Digital Corp. Now, this company is definitely a short-term investment company. I wouldn't own this company for 10 plus years. I'll get out of it any like within a week or two. Might hold it for a couple months. But this company is not a long-term investment to me. Why? Let me break down the financials, right? So the total debt to equity is acceptable. The debt to EBITDA is okay. It could be better, right? The EBIT to interest expense is risky. The net income to shareholder equity is not consistent. The net operating after tax in the debt plus equity is not consistent, right? The total debt to free cash flow is horrible. Now, since that being said, WDC would not be a would not be a company I will hold for the long term. It was good because I saw it was going crazy within the S&P, right? Within SPY, I saw it was one of those companies that was going good for the year, and it popped up. I have to slap it on my watch list. But am I going to be watching this company for 10 plus years? No, it couldn't improve. I'm not saying it can't improve, but based off the financials, this is not something I will hold for long term, but it was a good short term investment. Let me explain it, and I'm going to show you guys me exactly getting into the trade.
Play I got in today was this WDC, Western Digital Corporation. I gotta be quick here. I only got like 3 minutes left. um, I like this displacement above this swing high right here, and we're at this equilibrium, and we dig down into a discount. After we had this huge displacement above this 163.78, I'm like, bet now I'm looking for it. After this before this displacement happened, did a fair value gap get created? Yes, we have all these gaps right here. So I'm like, bet I'm gonna take this entry. And I liked how we held. We didn't close under the consequent encouragement of this 4 hour. Let me put it on regular extended trading hours for y'all. I like these gaps right here, like that occurred before the displacement, had this huge displacement, then we tap back down to these gaps. Also at equilibrium, I definitely got WDC going to all-time highs.
WDC did what I wanted it to do. It did hit all-time highs, and once a company hits all-time highs, I am exiting. I don't want no parts of it at all. After a company hits all-time highs and I'm in calls, I got in during a discount. If when it's a short-term investment, I'm all out. I don't want no part in it. After it's at all-time highs, I'll let it do what it do. I don't care what it do after. I don't care if it go up 100% more after that hit that all-time high. I buy on discounts and I sell on premiums. That's just my system, and I gotta stick to my system. But let me show y'all this perfect exit right when it hit all-time highs for WDC. Now this was good, and it did it right when the Fed was speaking. I was like, oh yeah, I got to get up out of here too. This is it. This was a good trade. Now I did it exactly how I explained it and exit the trade, and it went exactly how I wanted it to go. Now, those three short-term investments I'm in and out the year with, I am not touching the stock market for a swing trade or a short-term investment for the rest of the year, man. And I'm just good. I'm just ended off with that being up 2,900 this month, and I'ma just chill. I ain't gonna do nothing else. But of course, I gotta show y'all the percentages because the percentages do matter. The technicals and the percentages. I showed y'all the money. Yeah, that's cool for the clicks and the likes and stuff. But what plays the most important part to me is first the technicals and then the percentage. First, we're gonna get into Robinhood. Robinhood, it was 124% trade. It was a 1R. So I made 100% of my money back that I was risking. Now, what made me come up with these numbers? Because when it's a short-term investment, this is something called an option contract. This is the option contract I bought. And I'll let you know when I got into it, right? The same day. 3.68. Now that's my average buy price. You do the average buy price to what was my sell price, 8.54. Now from that 3.68 to that 8.54, that makes it 124% gain. Now moving on to the second one, which is what? Palantir. Palantir was a 1R. That means I made 100% of my money I was risking, 114%. Now, the buy price of Palantir was 6.85, which was the sell price, that 14.7D. So, adding those prices up from 6.85 to 14.70, that's a 114% gain. Going to the third, Western Digital, WDC, right? The buy price was what? That's this 12.75 to this 24.75. Now, what is that? That is a 94% gain. So, that was my options gains on that. These were good short-term investments. You get in of them, you get out. And these trades, I'm not 100% guy. Nobody knows 100% of the market except for the market makers. um, you're gonna take some losses in this game, but in this case, I did take all these dubs. If there would have been a loss, I already told y'all my stop loss. Well, my stop loss would have been. But yeah, man, this is a great way to end out the year. So with that being said, y'all have a blessed one. I'm gonna catch y'all on the next vid. Lord willing, shalom.